Imagine a world where financial services are as accessible as the internet. That's the promise of fintech. But how does this landscape look in emerging markets today? As we delve into this vibrant landscape, we see an arena ripe with opportunities and challenges. Emerging markets are teeming with innovation, particularly in the fintech sector. The rise of digital banking, mobile money, and peer-to-peer lending platforms has revolutionized financial services in these regions, creating a thriving ecosystem of startups and entrepreneurs. In the heart of Latin America, for instance, we find a fintech scene experiencing both highs and lows. Companies like Nubank, the largest fintech in the region, have seen their shares dip substantially, reflecting the precarious nature of these markets amidst global economic shifts. Yet despite these fluctuations, the potential for growth remains significant. Mobile money, a particularly potent force in the fintech sector, is transforming economies across the globe. From the bustling cities of Southeast Asia to the expansive landscapes of sub-Saharan Africa, the convenience of mobile transactions is democratizing access to financial services, fostering economic inclusion, and stimulating local economies. Simultaneously, the rise of peer-to-peer lending platforms is disrupting traditional banking models, providing a crucial lifeline for small businesses and entrepreneurs who may struggle to secure loans from conventional financial institutions. This shift not only democratizes access to capital, but also drives economic growth and innovation. However, the path to fintech success in emerging markets isn't without its hurdles. Startups face a myriad of challenges, from navigating complex regulatory landscapes to building trust with consumers in regions where skepticism towards digital financial services lingers. Moreover, the global economic climate has proven to be a double-edged sword. While it has sparked investor interest in these markets, it has also led to a more selective and demanding investment landscape. Startups now need to demonstrate clear paths to profitability to secure the necessary capital for growth. Clearly, the fintech landscape in emerging markets is vibrant and dynamic. But what does this mean for global investors? Let's delve into a specific case, Nubank, the largest fintech startup in Latin America and the largest listed bank in the region. This Brazilian powerhouse took a bold leap onto the global stage with its initial public offering on the New York Stock Exchange. Valued at an impressive $41.5 billion, Nubank's IPO marked it as a trailblazer in emerging markets. However, the journey to this milestone was not without its hurdles. The road to the IPO saw Nubank having to reduce its valuation by 20% due to weak demand. Yet, despite this setback, Nubank managed to secure anchor investors, including heavyweights such as Sequoia, Tiger Global Management, and SoftBank Latin America funds. This investment provided the means to fuel its operating expenses, capital expenditures, and potential mergers and acquisitions, demonstrating the resilience and strategic prowess that characterizes successful fintech startups. Today, Nubank is a dominant player in Brazil, Mexico, and Colombia, serving a staggering 48 million clients. Its meteoric rise and continued growth exemplify the immense potential that emerging markets hold for fintech. Yet, it's also a testament to the unique challenges these markets present. For instance, the global stock market rout and higher interest rates have led investors to reduce valuations of Latin American startups, including Nubank, which saw its shares sink 60.6% in the past year. Startups like Nubank must navigate these turbulent financial waters, conserving cash and demonstrating a clear path to profitability to satisfy increasingly selective investors. Despite these challenges, Nubank's story is one of success, resilience, and innovation. It's a beacon for other fintech startups in emerging markets, showing that with strategic planning, robust growth, and a clear vision, they too can make their mark on the global stage. Nubank's journey illustrates the immense potential and the unique challenges of fintech startups in emerging markets. Another intriguing case is Creditas, a unicorn fintech startup in Latin America. Creditas has been making waves in the financial technology sector with its unique approach to managing its capital. In an environment where investors are reducing valuations of Latin American startups due to the global stock market rout and rising interest rates, Creditas has chosen to take a different path. Instead of seeking more funding and potentially accepting a lower valuation, This unicorn company has opted to conserve its cash. This decision underlines Creditas's strategic mindset and its commitment to maintaining its financial health. The company is not planning to raise capital this year, a move that sets it apart from many of its peers. While other startups might rush to secure more funding, Creditas's decision shows a clear understanding of the current market conditions and a willingness to adapt its strategies accordingly. Moreover, Creditas also expects to moderate its credit growth. This is a significant step for a fintech company, reflecting a cautious and measured approach to expansion. By moderating its credit growth, Creditas can ensure it maintains a sustainable growth path rather than risking overextension in an unpredictable market. These strategic decisions by Creditas highlight its leadership's understanding of the evolving financial landscape. The company's proactive approach to managing its cash and moderating its credit growth is a testament to its commitment to long-term sustainability, even in the face of market volatility. Creditas' approach provides valuable insights for other fintech startups in emerging markets. It demonstrates the importance of prudent financial management and the need for flexibility in response to changing market conditions. Rather than pursuing aggressive growth at all costs, Creditas is showing that a more balanced approach can lead to long-term success. Creditas' experience underscores the importance of prudent financial management for fintech startups in emerging markets. So, what do these cases tell us about the opportunities for global investors in emerging markets' fintech sector? The financial technology sector in emerging markets is a landscape of vast potential. Companies like Nubank and Creditas are testament to the immense possibilities. Nubank's initial public offering on the New York Stock Exchange, despite a rocky start, ended up valuing the company at a staggering $41.5 billion. This propelled it to become the largest listed bank in Latin America. The success of Nubank's IPO underscores the appetite of investors for fintech startups, particularly in these emerging markets. And it isn't just about the initial investment. The proceeds from such offerings are generally used for working capital, operating expenses, capital expenditures, and mergers and acquisitions, all of which can create a ripple effect of economic growth and further investment opportunities. Meanwhile, Creditas, another unicorn fintech, has chosen a different path. They're conserving cash and moderating credit growth, a strategy that might seem counterintuitive but is actually quite prudent in the current global economic environment. This illustrates the diversity of strategies and paths to success available in the emerging markets fintech sector. The interest of emerging market investors in Latin America is on the rise, and this trend is expected to continue. The New York Stock Exchange is preparing for the reopening of markets for new equity offerings from the region. This is a clear indication of the increasing recognition of Latin America's potential as a fertile ground for fintech innovation and investment. However, it's not all smooth sailing. As we've seen, startups that raised cash at peak valuation may have to accept a reduction if they need more money this year. The global stock market rout and higher interest rates have led to reduced valuations of Latin American startups. But even in the face of these challenges, these companies are demonstrating resilience and adaptability. In conclusion, fintech in emerging markets presents exciting opportunities for global investors. But these opportunities come with their unique challenges. As we wrap up our exploration of fintech in emerging markets, let's recap the key points we've discussed. Our journey began with an overview of the fintech landscape in emerging markets. We learned that while these markets are ripe with opportunities, they also present unique challenges. High interest rates and global stock market volatility can significantly impact startup valuations, as we've seen in Latin America. We then delved into the experiences of two key players in this arena, Nubank and Creditas. Nubank, despite a 60.6% drop in share value, has emerged as the largest listed bank in Latin America, with a compelling $41.5 billion valuation. Their recent IPO, although reduced by 20% due to weak demand, marks a significant milestone for fintech startups in emerging markets. On the other hand, Creditas, a unicorn fintech, has chosen a more conservative approach, opting not to raise capital this year and instead focus on moderating credit growth. This reflects the need for startups to conserve cash in unpredictable environments. The opportunities for global investors in this space are as diverse as the markets themselves. The recent increase in interest towards Latin America since the Ukraine war reflects the shifting dynamics and potential rewards of investing in these markets. However, investors are becoming more discerning, demanding a clear path to profitability from startups. In response, the New York Stock Exchange has been preparing candidates for market entry, anticipating a window for new equity offerings from Latin America by September. This indicates that while the terrain may be challenging, there are ways for startups to navigate it successfully and for investors to reap the rewards. Armed with this knowledge, global investors can navigate the exciting but challenging terrain of fintech in emerging markets with greater confidence and insight.